Hey, how's it going, Sid?
Yeah, very good, Tiago. How are you?
Yeah, can't complain. Another day, another dollar.
Indeed, indeed, indeed. Not for long, the dollar bit, hopefully.
Oh, that'd be good, wouldn't it?
Yeah, good, good, good. Yeah. How's the weather down there?
Mixed. Some days are beautiful, other days are a bit rainy and cloudy.
Okay,
So-
we've had a really good spell. It's been sunny every day, pretty much.
What? I don't believe it.
Chilly, but
Don't
sunny,
believe it.
but
Don't
beautiful.
believe it.
Oh, clear blue skies, mate. Loving it.
What are we talking about today, then?
So, well, I think we've talked about a few technical bits. We've talked generally about Bitcoin, but it'd be a good idea to talk about some of the common scams and pitfalls and sort of the FUD, which is the fear, uncertainty, and doubt we get constantly in BTC. So maybe we can sort of shed some light on that. What are your thoughts on that?
Interesting. Are we going to put people off forever? Is this just the scammiest space ever, do you think?
Well, that's the point is quite the opposite. Hopefully, we'll be able to talk about some of the scams that constantly come out and how people can watch and avoid them before they get sucked into one.
All right. What should we start with?
So, in no particular order. Shall we start with the scams we've noticed over the years you've been in this space and see what all we can remember?
Yeah, let's kick off with, I don't know if this is a scam, but certainly at best something to be wary about. I think a lot of people have noticed this year about interest-bearing accounts for your Bitcoin.
Yeah, that's a good one. I mean, interest-bearing accounts kicked off just around sort of just after 2018, 2019 space when there was the bear market at that time. And it was a great way to make more Bitcoin from the Bitcoin you held. And there were companies like BlockFi, Celsius, to name a few, that entered the space. They seemed quite reputable. They said, we'll take custody of your Bitcoin and then we'll lend it out to other companies and we'll give you a return. And I think at the peak of it, did the return go all the way up to 10% or something?
I did, yeah. I mean, I remember, I think with BlockFi, what are they getting, about 8%, was it? And I think Celsius was up at the 10 mark, yeah.
Yeah, it's quite lucrative, wasn't it? And people thought, easy money. I mean, all you have to do is put your Bitcoin and not take any risk in trading accounts and you're getting 10% guaranteed.
Turns out there was a reason for that, wasn't there? I mean, I think Madoff had good interest rates, didn't he? Back in the day?
Very good interest rates, yeah, risk-free as well. Yeah, I think what we're trying to say is, look, there's always a reason behind this, and the reason behind what came out in the end was that people gave out their Bitcoin to these companies like BlockFi and Celsius and said, look, generally it's going to be safe. They're going to keep it. We're going to get 10%, and I'm not investing into anything sort of which could possibly be considered risky in terms of crypto and Bitcoin, so to speak. But what was missing was any transparency. And I think Preston Pish talked about it a lot. That it would be much better if BlockFi had two separate products. One where they actually showed what risk they were taking with the money that you had invested with them, and one where they would just not take any risk and just put your thing in cold storage where you could see it and it was obvious that every time it moved, you would be given a reason why. But that never happened. So all these companies did was they took the coins off you into their account. It still showed up on your dashboard as if it was in your account. And then they lent it out further to people nobody knew about. And they were basically hedge funds, exchanges, and all sorts of other shenanigans that were going on in the background that you had no idea how much risk your coins were being subjected to. Am I right in that? What do you?
Yeah, no, absolutely. So I think these interest bearing accounts, they're on a scale, right? So on one side, I'd put maybe the BlockFi, which wasn't a scam. It was a genuine company, and they were generally trying to offer a product. But on that side of things, they end up lending, as you pointed out, all your Bitcoin to these allegedly very safe firms like 3AC, who then it turned out were just degen trading, on all the illiquid shitcoins. So that's one side of it, which is where you're giving them your Bitcoin. You have no idea what risks they're taking. As you pointed out, it's just a black box. So not necessarily a scam, but just very risky and probably unadvisable. And it comes back to this point of if you don't know the risk you're taking, then you can't know what position size to take. So that's one end of that spectrum. And then the other end would be, Mashinsky and Celsius, where it looks like it just actually was a Ponzi scheme. They had their own token, the Cell, and he was offloading that, dumping that onto retail, and then depositors' Bitcoin were being used to buy up Cell in order to prop the price up. And all these people who thought they were just giving their Bitcoin in and getting it out, actually he was just propping up the Cell. So that's just a classic Ponzi scam. So I think that's the spectrum that these operate on, these products.
And exactly. And the thing is, we don't know. We don't know when you're giving out these your hard-earned Bitcoin away. You don't know what end of that spectrum you're at.
You don't. And I would give this warning, this red flag. If somebody is there saying that you should give them your Bitcoin, it's safer to give them your Bitcoin, that's a red flag. Mashinsky was doing that. He was going on, wasn't he, about how many Bitcoin have been lost in self-custody and how he was safer than a bank. If they're actively out there campaigning for you to give them your Bitcoin, that's a red flag for me.
Yeah, no, I agree. And the point is, it's complicated enough. We talked about how life doesn't need to be this complicated. Just don't take the risk and it's not even 10% now. I think most of these companies that are giving you interest or some yield on your coins, it's less than 1% or 2%. I mean, why would you want to risk your money for that level of sort of reward?
Worse than risking your money, risking your Bitcoin. You're risking an asset that historically is going up, 180, 200% a year. For 1%. It doesn't make any sense.
Yeah. I mean, it's just not worth it. It's not worth it. The whole point is the Satoshi's concept was to take the middleman away from money, concept of money completely. And yet we said and self-custody was the key to it. And now we've got self-custody and we're giving money away back to these middlemen to look after it for us. It's just wrong. So just keep it in your cold storage. Listen to the hardware wallet episode. It talks all about it. It's not that difficult. It's easy. Just keep it in your cold storage. It's not worth giving it to interest-bearing accounts.
Sure.
What about sort of the trading? Let's move on to trading secrets courses that were rife on YouTube and Twitter and Instagram and Facebook.
So I don't want to dox you here, Sid, but I know both of us have fallen for this. So you've got these supposedly amazing traders, and they'll charge you, and then you'll go into their WhatsApp group, and they'll give you buy signals and sell signals, and everybody's supposedly making a fortune. I don't know about you. I did nothing but lose money on that, and I've always wondered, if these guys are so good, why are they pissing around with all this? Why aren't they sitting on their private island, with a G5 parked up behind them?
Yeah. Yes, we have been guilty of that. And every time we thought, okay, maybe this guy is the one who understands it and he's got this clever little formula that'll make sure that we're going to double our hodl by the end of the month. Yes, it was wrong. Every time I've traded on their signal, I have lost money.
And they're not all scammers, right? Just to be clear. I mean, some guys genuinely think, they're good, and they might have had some really successful trades and they've come up with their own proprietary signals and whatnot. I still don't think it works in my experience. And then on the other side, you do have active scammers that know that they have no edge and they're still trying to sell you this pot of gold anyway.
Yeah, I mean, there's a whole spectrum of them as well. You've got people who genuinely feel that they can use the previous experience they've got as traders in financial markets, traditional markets, and they can use it here. And some of them have succeeded, but not all the time. They've succeeded at some points in time and failed miserably at the other times. But the difference is, you will do these courses, you'll think you've learned how to play it, but you will never understand how much exposure you want to really put into this and what the risk and reward should be for you and how your emotions are going to deal with the roller coaster that is Bitcoin.
Correct. Not to mention the fact that in order to do this, you've got to keep your coins on exchange, right? So you've got this whole third-party risk as well you've now introduced.
Very good point. Ask anybody with trading accounts on FTX.
For sure, yeah. And again, okay, if you're pissing around with, $100 or something, but, if you've got real money in this, it's just not a risk that I would take personally. Yeah,
I agree. I mean, if you're going to trade and you want to follow somebody's course, it's up to you. We just lost money every time. But equally, just do it with money that you definitely are ready to lose and not lose sleep over it.
Yeah, for sure.
Yeah. So that's that. The other one that's I have been subjected to quite a lot is Telegram groups and Discord groups. And you've got these people, same, who run trading courses. They've got, or they're just sort of insiders, alleged insiders, and they know something that the others don't. And they run these Telegram groups. Or if you're already a part of a Discord group from a genuine company or a genuine product or a genuine group, and you'll have people DMing you in there directly saying, pretending to be somebody else because they don't need to be verified. So hypothetically speaking, I think Plan B is the one, is somebody who puts this stock to flow model on the Twitter, which became a big thing. And I'm sure you'll find out about it eventually. But there were so many people pretending to be Plan B on Twitter and also on Discord and Telegram and asking people to give them money so they could invest using their models. So the point is, you don't know who you're talking to on Twitter, Telegram, or Discord. And there's a high chance that there is a scammer on the other side of that message.
Yeah, anybody on Twitter proposing some sort of investment is a scammer. Just as a general rule, just no, block it.
Yeah, agreed.
It's not the real person you're looking to follow. Look for the blue check mark. A lot of them have that these days.
Yeah, and even the blue check marks, if they're asking you for money, not sure about that. Yeah, don't do it. Right. We talked about the second-hand hardware wallet on episode number 2, I think. But do you want to just talk about it again, Tiago?
Just as a general rule, never buy hardware wallets from anybody other than the manufacturer. Maybe Amazon, but I don't go any further than that. Don't take a secondhand one off somebody you know or anything like that. Just make sure you get it in a sealed unit, and it hasn't been tampered with to as much as you can. If the risk there being somebody's tampered with it and they've extracted the private keys before you get hold of it, and that just means that they can at any point transfer out any Bitcoin you hold on that wallet in the future.
Yeah, and that's the key. It might not feel like you might suddenly start the wallet thinking, no, this is brand new and nothing's happened. I've had my Bitcoin on it for almost 6 months and nothing's happened. So even if you already have purchased wallets that you bought secondhand or somebody gave it to you, you thought, oh, there's no problem at all. It's still there. But they can withdraw it at any time in the future.
They have full access to all your transactions. So they can just sit there watching your account, see what's going in, what's going out, and then strike at the appropriate time.
Correct. So if you've got an old wallet from somebody else, or you bought one off eBay or one of those sites, just buy one from the manufacturer, transfer all your coins into the safe wallet and get rid of the old one.
And also, there's some quite clever targeting attacks now as well. Like, BlockFi, unfortunately, this is another risk now when you go with centralized platforms like this, but they had a huge hack and all their customer data was stolen, including balances, addresses, just really, really ugly stuff. So now this is available for sale on the black market. So anybody can go there and see the person's name, a physical address, and Bitcoin balance. So that's pretty ugly. And also email. So, okay, you've got the physical threat, but also we're finding that there's some very targeted emails pretending to be from, maybe BlockFi or Trezor or whatever, because they know that those people have Bitcoin.
Yeah. So basically hackers pretending to be support staff for your wallet. If something's gone wrong, it happens a lot. So just do not speak to anybody on the phone that is supposedly helping you set up your wallet or move money around.
And nobody legitimate will ever ask you for your seed words. Do not ever tell those to anybody.
Yeah. I remember I was setting up my node on Umbrel and basically set up a Lightning wallet on it. And I was having some issues. And to give you an idea, I went on to the Umbrel Discord group, which is a very genuine group. It's all full of people trying to help each other out, set up the Lightning nodes and get it up and running. And I had a few issues because my Lightning wallet was frozen. I could not get it to work. And I went on the Discord channel and I said, put my request up. Within a space of 5 minutes, I had a direct DM from Umbrel support asking me how much money I had on my Lightning wallet. and if that person could help. So that's how quick scammers move. You won't even have a chance to think or go back to the community to find out if you're speaking to a scammer or not. So just be really, really careful out there.
And that's also another red flag whenever you're being scammed. And this goes for bank accounts or Bitcoin, whatever it is. If there's a time-sensitive issue where they're saying, you've got to do this now, there's a huge risk, and they make whatever it is up, that's nearly always a red flag. I had that where they got hold of my bank details, rang me up, and they were saying somebody was, withdrawing money from my account, and they needed me to give them their details or whatever so they could block it straight away. There's always a time pressure issue with a lot of these scams.
Yeah, space and time. Make space and time for yourself, as they say.
Yeah.
Right. Okay. So that was that. The other one, which is slightly, probably less likely, but it's a big one. It's happened in Hong Kong and China a few episodes. And Jameson Lopp, who's the head of CASA, he runs a security blog, which is well worth its weight in gold if you haven't, if you want to get more, delve deeper into this. And he talks about a couple of incidents that have happened in meetups. So you had a crypto meetup or you had a local Bitcoin group and you went there and you met a lot of people. And obviously when you meet people, you tend to be trusting and you sort of shake hands and have a drink and look them in the eye and everything looks hunky-dory. And basically you probably just trying to show what a solid Bitcoiner you are, disclosed how many coins you have in your wallet. And the next thing you know is you get to the car and somebody's got a gun pointing at your head or something along the lines, and they force you to basically, they relieve you of the burden of your Bitcoin from your wallet. Or your
or the other one is, cash for Bitcoin trades. Again, this seems to happen a lot in Asia, but, people come with $10,000 worth of cash to buy Bitcoin off somebody. And of course, there's more than one person and it all goes wrong.
Yeah, you don't get the cash, but they get the Bitcoin.
Correct.
Yeah. So just be careful when you're meeting strangers and you're talking about your Bitcoin. Just remember, protect yourself at all costs. Do not disclose how many Bitcoin you have. Don't talk about it. Just talk about Bitcoin generally. But there's no need to discuss how much Bitcoin you have. There's a rule there, isn't it, Tiago? Do you remember? You think you mentioned it once.
Well, always talk about Bitcoin. Never talk about your Bitcoin.
Correct. Yeah, that's the one. That one. Yeah. No, very good. So that's another one. Another one that is that you've got dodgy wallets. So it's not such a big problem on Apple Store, but some of the digital wallets you've got on Android have been in the past found to be corrupted. So you think you're storing your coins on an online wallet on your phone, but the person who's designed the app, it's basically he's got the backdoor entry into your seed words and your Bitcoin.
Yeah, I have to admit, I don't know how prevalent this is. I know there have been instances of this, but I don't know if it happps, how often it does.
It's just something Jameson Lopp talked about as well, and I haven't seen it because I've sort of not been on Android App Store, but just something to be aware of, that stick to the big names that are, look up on the internet, find out which are the names that are reliable. If you're going to hold some little bit of Bitcoin on your phone, just make sure it's in a wallet that's nice and obviously been vetted.
Yeah, good idea.
Right. So main thing is out of this is that you gotta be careful. You just gotta be careful in this space, and I think it gives you a huge. Sorry. Yeah. Keep it simple.
Just keep it simple. Yeah.
Yeah. Keep it simple, and just make sure you look after things yourself. You're not giving anybody else the ability to look after or take responsibility for your affairs.
Yeah.
Shall we move on to a few pitfalls that people have had over the years that might give people an idea what are the sort of risks associated in Bitcoin, very generally?
Well, the common sort of mistakes, I guess, that people make.
Yeah, something like that.
Yeah, so custodial wallets, I suppose, is a bit tangential. The advantage, of course, with custodial is it's quite simple. You don't have to mess around with seed words and keeping those secure. It just kind of works. But of course, goes back to this: not your keys, not your coins. So you're reintroducing this third-party risk that Bitcoin was created to solve. So I would recommend not doing that for most people. Maybe, there is an argument to be had if you're, maybe in your 80s or something. I don't know, there's some edge cases, but for the vast majority of people, I'd say steer clear of those. And that then leads in, of course, to the losing your seed phrase, because you might set up your wallet and then you never need them again, and you kind of forget about them until the day that you do need them, and then you find that you haven't got them.
Yeah, I think that's a big one. Somewhere safe to keep your seed phrases, and somewhere really, really safe.
Yeah, and away from prying eyes as well.
Yes,
Maybe
quite.
just keeping them safe, but if everybody in the house can read them.
Yeah, not on a fridge magnet
Yeah.
in the kitchen. The other one is sending Bitcoin from your wallet. So it's the first time you do it. It's very daunting. And I think Tiago talked about it in the episode on hardware wallets, on how to initially test with sending small amounts and then recovering small amounts. But sometimes you might not have done it, and it can have its own pitfalls, can't it?
Yeah, I mean, so the first thing is you triple check that the address you're sending to is the correct address, because I think I said it before, but there's no help desk. You can't bring this stuff back if you send it to the wrong address. It's gone forever. So that's number one. And kind of associated with that is to always check the address on the screen of your hardware device, because it would be easy for if your computer is compromised somehow with a virus or malware. They could show one address, but actually you could be in the background sending it to another address, which is controlled by, say, the hacker. Now, theoretically, the address shown on the hardware wallet will always be the correct one. It should be impossible for that to be changed. And the other thing, which is a bit sneaky and I've heard happen before, is to make sure you check the change address on the wallet. So with Bitcoin, the way it works is, let's say you receive two transactions, so half a Bitcoin and 1 Bitcoin. So you might just think, well, my balance is 1.5 Bitcoin, but actually it's not. Your balance is, you've got one, it's called a UTXO. One UTXO will be half a Bitcoin and the other one will be 1 Bitcoin. So let's say that's my wallet, and Sid, I want to send you 0.1 of a Bitcoin. What will actually happen is my wallet software in the background, without me knowing, will choose one of those UTXOs, probably the 0.5. It'll send that to Sid. It'll send 0.1 of the 0.5, and it'll return 0.4 back to my change address. And what I've heard of is hackers changing the change address so that it gets redirected to their wallet. So you might be really diligent and be checking where your Bitcoin's going, but they end up getting probably more maybe even than you've even sent, and they get sent to their address. So that's another one maybe to watch out for.
So basically just read the characters. It takes a bit longer, but hopefully you're not using these wallets to transfer money 5 times or 10 times a day. It's once in a blue moon you'll be transferring money from one space to another. Because for sort of quick and easy transfers, there's Lightning, and we'll talk about that in one of the episodes. But for the main Bitcoin transactions, you shouldn't be transferring too often. So when you do, please double check your addresses.
Yeah, just pay attention. Don't be doing other things. Don't be, washing up at the same time or whatever.
Multitasking, watching 10 movies on Netflix at the same time on a screen whilst you're trying to do it.
Yeah.
Agreed. Yeah, brilliant. Another one it's not exactly a pitfall, but it's definitely something that adds, people don't do it, and that can add security, is not having your two-factor authentication set up on some of these accounts.
For sure. I mean, and a lot of this just boils down to good IT security. I mean, all this is equally applicable outside of the Bitcoin world. It's super important that you have two-factor authentication enabled on important things. So banks usually require it now. So 2FA, for those that don't know, it just means you need 2 factors in order to be allowed to access your account. So one of those factors will be something i.e. your password, and the other one will be something you have. I.e. It could be a YubiKey, which is a physical device you plug into your computer, or it could be one of those rotating codes you have on an app on your phone. So it just means that somebody would need a password and, for example, your phone or the YubiKey in order to access it. So if your password is hacked on your email address, nobody would still get access to that. And that's important to use in any security critical account. And
somebody once said to me, and I think it's quite valid, is that one of the most important passwords is your email password, your primary email password. So make sure that is robust. You keep changing it regularly. It's really long and it's absolutely secure, because majority of places where people will try to reset it, the email is sent to your inbox. And if your inbox has been compromised, you have no control over the account.
It's the keys to your kingdom, isn't it? So use a password manager as well. It's not perfect. We've seen with LastPass there have been...
I lost. It was a complete shit show.
It was. But even with that shit show, you know what? It's still an awful lot safer than just reusing the same password on every website. So use a good password manager, something like Bitwarden. For those of you that are a little more technically minded, you could take it one step further and you can self-host your own Bitwarden account. We won't go into details here, but it just means, for example, you use an account with LastPass. It's a big honeypot, right? Because hackers know everybody stores their stuff there, so they'll try and attack LastPass. If you use a self-hosted Bitwarden account, then they have to go out after each individual person. So that sort of reward level just isn't there for them. So if you're, like I say, if you're technically minded, that you could go down that route. That's a good way to go.
Yeah, agreed. Okay, so that should cover. Is there any other sort of pitfalls you can think in this space that we've encountered over the years? Or
not really, no.
Risks?
Just keep it simple.
Yeah, keep it simple. So now we'll move to the sort of the spicy end of this podcast, which is the FUD. And you'll hear this term being used a lot. So what is FUD, Tiago?
Fear, uncertainty, doubt. So it's just everything that comes out week after week, year after year, how Bitcoin is going to boil the oceans. Anything you can think of, and it's all nonsense. But it's like a lot of this stuff superficially, it kind of makes sense, but as soon as you start diving into it, it's fairly easy to deconstruct. But of course, most people just read headlines, don't they? Nobody really goes into this. So I guess one of the big ones is, like I mentioned, mining energy, right? And how all of mining is going to use the whole world energy supply.
Yeah, so we'll talk about it. So every time you'll hear some of these things, you'll also hear people, the Bitcoiners, saying, more FUD. And that's what they mean. It's basically just allegations that people have just chucked at Bitcoin without any substance, because it's easy and it'll take your eyes. You'll read it for a couple of seconds and that'll be your opinion forming news for the day. So the Bitcoin mining energy is a good one that Tiago pointed out. And this all started because Bitcoin's got a way of functioning. The mining does something called proof of work, and we'll talk about it in another episode because it's a little bit more complicated. And Newsweek in 2017, I think it was, came up with this headlines, which was Bitcoin energy will consume the world's energy by 2020. So it was a classic clickbait, and everybody said, "Oh my God, we've got to shut this thing down because by 2020 we'll have no energy left if Bitcoin keeps going the way it's going." Well, that was the rumor. Now the fact, this is 2021's numbers I dug up the other day. So the global consumption of energy was 600 exajoules, right? Bitcoin consumption that same year was 0.396 exajoules, which is 0.066%. So not even 1%, 0.1%, 0.5%. So it's just basically, but people read Newsweek article because obviously it's a reputable publication, and they believed it. And suddenly Bitcoin was going to, as Tiago said, boiling the oceans. But it wasn't.
And of course, it's right. So all they did was, the Bitcoin mining was going exponential back then. So all they literally did was just expand the curve out and go, well, this is going to continue, and therefore it'll use the whole world's energy by 2020. As you've seen, nothing's further from the truth. I mean, what we know is the fact that Bitcoin mining is super sensitive to energy prices. So, if you're running a Bitcoin mine with more than, say, 6 or 7 cents a kilowatt hour, you're just not going to be profitable. So in reality, what ends up happening is Bitcoin doesn't go near energy that's being used by people for industry or residential use.
Or retail, yeah.
Or retail. It ends up going after stranded energy that nobody can use. So it's uber cheap. Things like dams in the middle of nowhere, that kind of thing, where that energy would just get wasted. And so, of course, it doesn't take the whole world's energy.
And also, it's not this is the other bit that people don't appreciate is Bitcoin is a very mathematical instrument. So you can tell exactly the energy it's using. You can just, it shows up every day. But if you look at other things like the army, the banking system, the washing machines in everybody's house, the dryers, the sort of the vacuum cleaners, how much energy do they use? Are you going to sort of quantify that? But because nobody's got the numbers for that, it's very easy to ignore it. But because Bitcoin mathematically tells you the amount of energy it's using, the network uses, you can just say, oh, hang on a second, this is gonna boil the oceans.
And not just that, but I mean, there's so many ways to shoot this down. But for example, if they can say, well, we're going to ban Bitcoin mining because it uses too much energy, well, who gets to make that decision, right? I mean, I don't use a hairdryer. So does that mean I could say, well, I don't think anybody else should be allowed to use hairdryers? I mean, washing machines use more energy than Bitcoin networks. So should we ban washing machines? I mean, where does it end? Who gets
and we should all go washing clothes by hand. Yeah.
It's just nonsense.
Yeah, it is. It is. So you'll hear a lot of this. And it's not going to stop today because it's just the way the world is going. And it's all clickbait. So if you hear it next time, ask for numbers. If they can provide you with numbers that make sense, then we can talk about it. But as Tiago raised a really good point, Bitcoin mining cannot compete with retail. It just cannot. We have seen the mining space. And if your electricity cost in mining, Bitcoin mining, is above 7 cents per kilowatt hour, you're losing money, pretty much. So,
sorry, no, carry on.
No, go ahead.
I mean, not only that, but what we're also finding now is that Bitcoin is a very flexible electrical load. So if you take traditional data centers like Google or Facebook run, they need 100% uptime. Their whole business goes down if you can't access google.com. Bitcoin is very different. You can shut down a mining operation by just flicking a switch and it'll just shut down and you can keep it down. So what we're seeing in Texas, for example, is when supply is tight and demand is high, they've got contracts with the miners there and the miners just shut down the machines instantly when they haven't got enough energy supply for the grid. And then they can turn them back on once the supply then outstrips demand again. And that's super important because grids need a base load. So the way it works is you'll have, say, 80% of the electricity use is constant. And then depending on, like, in the evenings, everybody comes home, and in the UK, it's, they'll watch Coronation Street and switch on the kettle. And then you'll find there's peak electrical requirements. So Bitcoin miners are able to respond to that. And so maybe they could run during the nighttime and the low periods during the day, and then you could switch them off at 5 p.m. as everybody's getting home or charging their cars or whatever. So it's a very flexible load that nothing else really can keep up with.
And it raises another good point, actually. And I think Harry Suddock talked about it a while ago. And it was that investment in energy infrastructure is a huge problem because it's very expensive. So you've had instances where basically they've said, oh, we're going to make a new city here, or we're going to make a new hospital here, or a new mall here. So we need power. And the power company has created a grid, set up the transformers, created energy production to supply at a huge cost. And they've gone out in the market and they've taken loan for it with obviously a business model. And then something's happened, like 2008 economic crisis or some other issue, and they've decided, no, the mall's not feasible anymore. We're not going to build the mall. Oh, and the hospital doesn't function here because it's just not the right place. We're going to shift the idea of a hospital to another city, right? Now, suddenly all that infrastructure that was built is now basically redundant. And not only is it redundant, it is a liability because somebody's taken a loan with a business model on that product. So now you've got all this infrastructure just rotting away, and that has happened time and time again. What Bitcoin mining does is it can actually not only use that stranded infrastructure, but it can actually fund. A lot of the miners, the big companies, were going in and funding infrastructure, saying, look, okay, you build this infrastructure for this mall, hospital, or the school, or whatever, and we will guarantee you that we will, worst case scenario, underwrite. If nobody else uses that energy, we will take it off your hands, and we will pay you X amount, right? So it gives security to an energy company, that they have a sort of a user of last resort, so to speak, on the other end of this equation if things don't go right. And also in the contract, as Tiago pointed out, it's built in. If the demand goes up in the evening, then there'll be curtailment. The miners will shut down and that energy will be used elsewhere. So there's a lot of FUD that goes on with energy and Bitcoin, but nobody talks about how Bitcoin steps into this field and changes the whole dynamics.
Yeah, agreed. No, in fact, so the FUD here is that Bitcoin is the enemy. Bitcoin is, boiling the oceans. The reality is actually the exact opposite. Bitcoin could be a solution, a green energy solution. Gas flaring and huge methane emissions. You can stick Bitcoin miners in there. There's just all sorts of stuff going on, and it's just the exact opposite of what the headlines are saying. But we might be starting to see a shift in that narrative. Actually, there's been a few things come out recently suggesting that maybe things are changing. So let's see.
Yeah, I think Texas is leading the way. The other one, which sort of links into this slightly, is also about that Bitcoin uses dirty energy. And that is not true, because by definition, dirty energy is coal-fired or gas-fired power plants. And this is what Tiago said is the base layer. This is what gives you guaranteed production of electricity, right? So most of the dirty energy is actually ideal for retail use, because they want constant supply available at all times. It is, funnily enough, ironically, the green energy that is we are being pushed towards, and I won't go into that because that's another rabbit hole. We're not going to get into the discussion, but you can't control when the sun is shining, and you definitely cannot control when the wind is blowing, right? So you have to have a base layer strong of energy source that is available at all times for household and retail use. So you can top it up with green energy, but can't form the base layer. So Bitcoin cannot use the base layer. It doesn't work like that. It can only use the energy that is being topped up, and it's intermittent and it's not reliable by its definition, because Bitcoin is the only thing that can adapt to that sort of energy production.
Yeah, for sure. Right, that's enough of boiling the planet.
Okay,
what do we got next?
Let's move swiftly on. That Bitcoin's a Ponzi scheme. So I'll talk about this a little bit, shall I?
Go on.
All right. So let me start by talking about what is a Ponzi scheme. So Ponzi scheme, for those who don't know, it's basically somebody, fraudster, is promising you oversized returns, right, for your investment. Madoff was one, and he promised some ridiculous number to his investors. The only way they can pay you that money is by you finding new investors to bring in the money. So basically what happens is you take $100, you give it to me, and I'm running a Ponzi scheme, and I'll say I'll give you 10% every month return on your money. So you're thinking 10%, I'm not even getting that per annum, but you're giving it to me per month. Brilliant. So you'll initially start with just $100, and I'll go to the back room. I'll basically put $90 in my safe, and I'll come back with the $10 from your $100 and give it back to you. And you say, wow, I've just got my 10%. And you'll go tell your mates, and they'll say, no, surely not. You see, yeah, he's given me 10%. So I say, okay, they'll all start with $100. And now I've got 10 of your friends giving me $1,000 every month, and I have to pay back $100, right? So I'm keeping the $900 and I'm giving $100. So those people then go around and tell their other mates, and they start bringing in more and more money. So you need to have new investors in order to make money in a Ponzi scheme, right? So that's first thing. The Ponzi's have to pay out regularly. But as soon as the new investors dry out because they find out the money's not coming or it's not quick enough, the whole Ponzi collapses. And Bitcoin is not a Ponzi scheme because it has none of this. There is no fraudster. There is no guaranteed returns, right? And it doesn't care whether new investors are coming in or not coming in to pay you any money, because you're not getting any money out of this. So remember the early thing we talked about, which Tiago mentioned? Celsius was basically the shenanigans behind it was a Ponzi scheme. So there was a payout. So once you understand what a Ponzi scheme is, you understand that Bitcoin is not a Ponzi scheme. And the fact is, you've got the investors like BlackRock, Fidelity, even Paul Tudor Jones, Bill Miller. Go listen to them. They're all recommending Bitcoin, right? then they're not out there recommending Ponzi schemes. They can't. They've done their due diligence. They've figured it out. They're not recommending Bitcoin because you can get some money back every month out of it. You may do on a good month. You might suddenly say, oh, actually, it's gone up in price. I'll sell some and make some. But it's your own money you're selling. You're not getting it from somebody else. So therefore, the whole concept of a Ponzi scheme does not apply to Bitcoin.
Here. Well said. Nothing to add.
Only for criminals is another one. I've heard a lot, isn't it?
I mean, we've touched on that before, haven't we? And a lot of people in the early days thought this would be great for buying crack or whatever. And it turns out it's not, doesn't it? I mean, so it's a public ledger, right? Every transaction ever made is there for anybody to see. Okay, it doesn't have your name on it. It's pseudo-anonymous. But again, if the FBI is looking into this, it's not beyond their wit to figure out who's doing what. And it turns out a lot of people are in jail for it. I haven't got the latest stats to hand, but the looking at chain analysis, I think they've figured out roughly what percentage of Bitcoin transactions are fraudulent, and it's well under 1%.
It's 0.3%. I've got it. I dug it out the other day. 0.3%.
There you go.
Yeah.
0.3%. So, but again, you just see this all the time in the papers, how, criminals, it's died down a little recently, but it's just nonsense again.
It all is. The time. But if you hear it, at least you heard it here first.
Yeah, and don't try and go and buy crack with your Bitcoin, because you will end up in trouble.
Yeah, but it's funny, isn't it? Isn't it ironic? The people who are actually calling Bitcoin is for criminals don't look at the US dollar or the pound. I mean, tell me which movie or which drug dealers do not deal in US dollars? So to talk about Bitcoin being for criminals.
Isn't there something like there's meant to be traces of cocaine on every US dollar bill out there or something crazy?
Yeah, every US dollar, and also in the UK it was the £20 note or the £50 note. Every £50 note had traces of cocaine on it. I think they've just changed the notes now, but that was the stat. Every one of them.
Also, this is the whole thing. I just find it all so stupid. I mean, look, thieves use shoes, right? They use cars. So what are we going to do? We're going to ban shoe wearing? We're going to ban cars?
Yeah, they'll go for whichever's the most efficient. Sort of, they may have used it in the past, but they used pagers as well. Drug dealers used pagers. They used internet. They used telephones. As Tiago said, you can't just. It's easy to associate things for the same, but because there's correlation.
It's lazy.
Yeah, it's lazy thought process, intellectually lazy.
But it's easy to write an article, isn't it?
Oh, exactly. Gets the clickbait, gets you likes, and all the rest that goes for it. Increases inequality is the other one I've got here.
Yeah, so I think that kind of goes down to the old argument of it's unfair because those that were in earlier get more returns. Is that what you're thinking with that one?
Well, I'm just thinking people say, well, some people have already got so much Bitcoin, the others haven't had any chance to it, so they'll be excluded from the...
Yeah, again, I've never understood that. It's hard to get a more fair system than Bitcoin. I mean, it's a public ledger. There are no barriers to entry, right? There's no paperwork barrier. You don't need ID. There's no minimum investment. You can invest $1. Sure, people that have been in a long time have higher returns, but I mean, that's just the same as anything else. They've took a lot higher risk, right? Bitcoin today at $20,000 is a lot less risky than Bitcoin, back when it was $100, right? Back in 2014, I mean, nobody knew if it was going to survive. I mean, it literally could have just died. I don't think anybody thinks that today. So there's still huge returns to be had. But yes, they're going to be less exponential than those that were in back in 2009, 10 for sure. But like I say, they took a lot more risk. And anybody could have bought it back then. And one of the other arguments they make is, well, Satoshi only put it out on the forum and only a few people knew about it. It's just irrelevant. Nobody cared about Bitcoin. He could have taken out an advert in the front page of the Times. Nobody would have bought this thing, right? So again, it just doesn't hold any water in my opinion.
That's a good point. Exactly. And also, I mean, if you think about it, I think Willy Woo or one of the other on-chain analysis guys have looked at it, and the distribution of Bitcoin is only increasing. So if somebody with the whales, which are the ones who have got the biggest Bitcoin in their hodl, always sell out when the price starts going up. It's just it's data proves it. They always sell out into the bull market and they buy into the bear market. And when they sell out, it is bought by everyone. there is more distribution. The number of wallets that hold less than one Bitcoin goes up exponentially. So there is distribution going on. And don't forget, the miners, most of the miners, majority of them sell what they produce to keep their energy, electricity, and the lights on, right? So those Bitcoin are then also bought. It's out in the market to buy. There's no shortage of availability. So it's not just only few people are being given the right and the opportunity to buy Bitcoin. It's not the same as the ICOs in the shitcoin that went on, where some people were initially given the coins at 2p compared to a pound that they're going to be sort of sold later on. Or in case of stocks, where some people get the first offerings and then when it finally goes public, they all dump their shit stock into everybody's and they walk away with their millions. There's no such thing. Bitcoin wasn't pre-mined. It is still available. It is sold at the same price to everyone, even now. So you can go to any exchange, decent exchange hopefully, and buy it.
Yeah, no, great point. And I think there would be a valid discussion to be had about this if it was shown that the concentration of wealth kept increasing in Bitcoin and the whales just kept getting more and more. But it's like you say, it's just not what we're seeing. The data is just not showing that. So I think it's a nothing burger.
Yeah, agreed. It's too volatile. I'll let you take that.
Yeah, well, of course it is. It's a brand new asset, right? It's a very small asset. It's worth, what's it worth at the moment? Somewhere in the 500 billion range. I mean, it's a tiny asset. So yes, it's going to be volatile. Now, the other thing is people consider volatility to be a bad thing. I'd argue that it's not necessarily a bad thing, especially if you position yourself appropriately and don't invest too much. Remember, volatility, it can be great if it's to the upside, which over a long enough time frame, it is in Bitcoin. So volatility is an opportunity, but if you can't handle that level of volatility, then I think you've just invested too much. So take some out.
Yeah, and yeah, exactly. Can't add anything to that.
Volatility is often to the upside in Bitcoin.
That's it. That's the key bit. And you want volatility. That's how you'll see that the coin is alive as well, because there's trading going on. People are buying and selling, and you want that.
Correct, you do.
The other one that comes on a lot which is a big FUD, is it's just too slow and it's not scalable, and that's why we need new tokens.
Yeah, I mean, pre-Lightning era, we were limited to about 7 transactions a second on the blockchain, on layer 1. That is perfectly sufficient, I think, for the store of value use case. Obviously, nowhere near sufficient for transactional use cases. So I think, disregarding Lightning, I think the transaction layer level is perfectly adequate today for store of value. And if that's all Bitcoin ever does, you're still looking at huge upside from here. Add in the Lightning Network, I think it's really starting to prove itself this year. I think transactions are going through much better. There was quite a high rate of transaction failures back a couple of years ago, but liquidity keeps increasing, nodes keep increasing. All the statistics with Lightning keep going up. And like I say, the payment success rate is very high. And I think, if that continues, I think we're definitely not going to have an issue on the transactional side either. So I don't agree with that.
Yeah, and I think people make this mistake of comparing, and you see articles saying, Bitcoin, the Visa, it doesn't even come close to Visa transactions. But Visa transactions are not the base layer of money. They're happening on the 3rd, 4th, 5th, 6th layer of where the real money sits at the bottom.
Correct. They're comparing apples to oranges.
And Lightning, actually, I think the statistic is, I'm not exactly sure with the number, but I'll happy to be corrected. I think it's 1,000 times faster and can carry more transactions than Visa network can.
Yeah, correct. And I think Andreas talked about this years ago, and he was saying this is why new technology works. New technology doesn't improve on things by 20%. It just goes exponentially better. And that's what we did with Lightning. That's what we're seeing with Lightning. It's just left Visa in the dust. But you're right. For years and years, we just heard this argument that, Bitcoin is whatever it was, 3% of what Visa can do or something. That argument just doesn't hold any water today.
No, good. There was this thing that Bitcoin was controlled mostly in China by a few miners. Do you remember that, FUD?
Yeah, again, I mean, so there was a few different things here. The first one was, yes, it was all in China, and that was a risk, and they could be controlled by the Chinese government, etc. So that was definitively put to rest last year, wasn't it, when the Chinese banned the mining in China, and we just saw overnight the network hash rate dropped. Was it 40-50% almost, something in that region, wasn't it? And the miners relocated, and now we're well beyond the peak we were before that. And I think that was a key resiliency test for Bitcoin, because where else can you see 50% of the network drop and nothing happened?
Oh, you're telling me, when did they shut the system down for the relocation? Just remind me.
That was last summer, I'd say, wasn't it? July,
but did they shut the
August?
system down? Was Bitcoin shut down for a while for maintenance?
No, Bitcoin was never shut for maintenance.
Exactly.
The only thing that happened with blocks, instead of being every 10 minutes, might have been every 11 or 12 minutes. But the system continued flawlessly when 50% of the network was just shut down overnight. And, that is resilience, right? There's not many other networks out there that can do that. So that was the Chinese FUD, which has somewhat died down a bit now. The other FUD is that, you look at the graphs of who's mining these things, and you're looking at the mining pools, and you divvy it up between 5 or 6 organizations are mining most of the blocks. So people say mining isn't decentralized. And again, the thing you've got to remember is those mining pools are constituted of individuals. Right. So you might have a pool that's mining 25% of all Bitcoin blocks, but you might have, I'm making numbers up here, but you might have 5,000 people in that pool. And if that pool decided to do something they didn't like, they'd just switch a pool. You can switch pools in a couple of minutes. There's no friction to that. So instead of regarding a mining pool as an entity, which is what a lot of these people were doing, you've got to regard the actual individual miners in that pool. And then it looks an awful lot more decentralized than it might superficially do if you just have a quick look at it.
Yeah, and it's changing the pool is as easy as literally going into your miner software and changing the address you're directing your mining energy towards, literally. And it happens within seconds. So it's not like you have to call someone and hold for 2 days in order to speak to someone.
Yeah, for sure.
So yeah, that's all nonsense as well. The other ones, this is a good one actually as well, which comes up a lot, is governments will ban it. And it's I hear that from a lot of people, but that it will become so successful. Ray Dalio says the same thing. He says it'll become so successful that governments will ban it. But the whole base of Bitcoin is that it's completely decentralized, right? So the reason it was created like that was so it won't have one point of failure, and it couldn't just be stopped. And that was, we just talked about it, moving from China to the rest of the world. It was seamless, flawless, like nothing had changed as far as the blocks kept going on. Bitcoin kept mining and nothing changed. So the thing with the governments banning it is, how are they going to ban it? Nobody needs the government to. So China banned Bitcoin mining, but it couldn't ban Bitcoin. And in fact, I think Bitcoin mining is back. The pools are showing that Bitcoin mining is back up in China. And the only thing the governments can do is ban themselves from this network. You can't ban the internet. People have tried. But all you're doing is shutting down yourself from the internet. So you're disconnecting yourself from the world financial innovation, so to speak.
Well, it's the same as trying to ban mathematics. I mean, that's all it is, right? It's free speech. I mean, how can you ban something where I can walk around anywhere with $10 million on me by just knowing 12 words? Tell me how you ban that. How do you ban a system where you can send somebody in any country in the world, final settlement, $100 million, you can send that transaction through a JPEG image? I mean, how do you want to ban that?
Yeah, exactly. And also, I mean, the fact is, the whole point of it being decentralized and being unanimous across the world is that anybody can use it speaking the same language, mathematical language of Bitcoin. So how do you expect all the countries in the world to unanimously work together to ban Bitcoin? I mean, they can't even agree to basic things right now. Look at the state of the world. I mean, somebody calls it a weather balloon, somebody calls it a spying machine. It's just a narrative. They can't even agree to something basic like that. You think they're going to agree all together unanimously at the same time to ban something that they have no control over?
Plus, I just don't think the game theory points to that happening, because
that's a good point.
it's a competitive environment, isn't it, among sovereign nations? And so they could all get around a table and everybody agrees, okay, we're all going to ban Bitcoin. But what happens if one of these governments figures out how potentially important Bitcoin is and they start stockpiling it? I mean, the game theory would suggest if you think somebody else, another government is doing it, you have to do it as well, or you're going to get left behind. So I don't see that one happening personally.
No, agreed.
That's not to say that individual jurisdictions won't have problems, right? I mean, you could be in a country where they try and do that, or, they could say, 20-year prison sentence for using Bitcoin, something like that. But there's always going to be jurisdictional arbitrage, I think. And so we'll have to see. Look, they will fight it, I think. And, recently in the US, we're seeing they're a bit like Operation Choke Point used to happen with industries that the government didn't like. It weren't illegal industries, think like online gambling, that kind of thing. The banks were just lent on by the federal agencies and told, there was going to be a lot more scrutiny on them if they supported these industries. We're starting to see that recently with Bitcoin in the US. It'll be interesting to see where it goes, but these are the kind of things government will do. I think ultimately it'll fail.
They'll try to off-ramps and on-ramps. They'll try to limit those.
They will. And, it could be difficult, right? But I do think in the end, Bitcoin prevails.
Yeah, but it's not easy. It's not easy. I mean, US probably can do it because they've got more control on the financial network, but China's tried to do it and they've rescinded it. India did it for a while and people weren't sure. And was it banned in India? Was it not banned in India? And it's back. Now the government is saying there's nothing illegal about Bitcoin in India or about Bitcoin full stop. And we are very excited because it's got such innovative technological benefits to the masses. So you can't, even the same country's governments flip-flop. So.
They do. And, if one government tries to ban it and then, Bitcoin keeps improving and getting better and more adoption, they're just getting left out. And it's very obvious. There's a very obvious left out, So I just don't think that's how it's going to go down. But I do think there will be, difficulties ahead.
Resistance, yeah. Now, which is why it also should be a lifeboat. Not saying you should invest all your money into it, but you should definitely have exposure to it.
Correct.
Yeah. Another one is, which comes out a lot, is quantum computing will break the encryption.
Yeah, so my understanding of this is that as long as you don't reuse your addresses, that Bitcoin is quantum resistant as it stands today. Now, in the future, should that prove not to be the case, it will always be possible to do a fork. Now, the problems with forks are when they're contentious. So maybe half the network won't agree to do it. You end up with problems there. However, something like an emergency fork because there's been a really bad bug or because we suddenly think that we're no longer quantum resistant, I don't think that would be contentious at all. So I think we are quantum resistant as far as I'm aware at the moment, but B, if in the future that was somehow to change, I think we could upgrade Bitcoin Core and solve that relatively straightforwardly. So I don't think that's an issue at the moment.
And also, don't forget, quantum computing, if it comes along, it's not going to come along to one hacker's home computer. This is sovereign level or very high level, sort of corporate level innovation that's going to take place. And that initially is not going to be directed towards hacking Bitcoin and the protocol.
Well, probably not. But I think the point is it's all this, you want to be able to verify, right? And not trust. So I think the idea is we wouldn't want them to be in a position to be able to do that, whether they decide to do it or not.
Correct. But also the fact that every other encryption will be broken. All 100%. Your banking, all your governments, all your military, everything will be broken. So Bitcoin's not going to be the standalone feature.
Correct. Yeah, there's nothing special about the encryption that Bitcoin uses. It's the same encryption used, as you point out, for your online banking, etc. So if Bitcoin is compromised, then everything is compromised.
Yeah. So just gives you an idea of a lot of stuff that you hear is on the face of it seems like, oh gosh, no wonder people don't like Bitcoin. But once you delve deeper into it, you realize that there's not much merit to a lot of these theories that come out on tabloids.
Yep, indeed.
Yeah, and I think Michael Saylor puts it really well, doesn't he? He says, anybody who tells me gives me FUD about Bitcoin, I can tell straight away that he spent less than 10 minutes studying the topic, because if he spent any time studying it, there is no way they would not understand how good this technology is.
Yeah, they either haven't studied it or they're up to no good, right? I mean, who was it said? I have yet to encounter anybody who's put 100 hours of study into Bitcoin and has come up with a valid reason as to why it's not going to work. Those people just don't exist.
Yeah. And even the energy one, I'm just going back quickly. I remember they found out that the people funding the articles about Bitcoin's energy use were actually being funded by Ripple Exchange, the Ripple company. I think it was it came out in the end that they were funding it. So there's always shenanigans in the background.
Garlinghouse, so the head of Ripple. Sorry, I know it's decentralized, isn't it? There is no head, but yeah. But Garlinghouse paid Greenpeace $5 million, didn't he, to do this, to get them to promote proof of stake, which is a direct attack on Bitcoin.
Yeah.
I mean,
we'll talk about proof of stake and proof of work in another episode.
Yeah.
Yeah. But I mean, the point of the matter is, this is not, as Tiago said, to scare you or what have you. This is just to show you it's all there, but it changes nothing.
Correct. And it's all noise, right? Yeah. And the key to success in the Bitcoin world is just trying to figure out where the signal is. I mean, the sea of noise. And the signal is just DCA and put it in a hardware wallet. Forget the rest.
Yeah. And there's another thing, that looking at the price every day, which we've all been guilty of, I'm not going to deny. But looking at price every day is not going to work, because I think Ray Dalio said it once, that if you're going to look at the score every day, every minute as a player in the game, you'll never win the game. You've got to be focused on the play. So just buy it because that's your play. Don't look at the score. We'll talk about the score at the end of the game.
Yeah, absolutely. The daily price is more noise, right? It doesn't matter what the price does tomorrow. It could be up 100% or down 90%. It just doesn't matter, right? What matters is 4 years from now, where's the price? And like you say, that can be difficult, but it comes with practice. And also it helps when you have a cycle or two under your belt.
Yeah, true. You've seen it. You've seen a lot. This is the other thing. It does accelerate your learning curve quite quickly. Yeah.
It's pretty rough when you FOMO'd in at 60 grand and then, you lose 80%. But
I know. You
just get through your first cycle.
Yes, indeed. So that was it. Is there anything else you want to cover on this one?
No, I think I'm good on that. Thanks.
Good. So listen, guys, we're just trying to get some stuff across that we've learned over the years. Some of it's probably relevant, some of it's probably not. But take away what you think works for you. Let us know what doesn't. We'd really appreciate your feedback. We're just starting out. We're just two mates just trying to get our thoughts out to you. So if there's anything you want us to talk about, let us know. If there's anything you don't like us talking about, let us know.
For sure. Thanks for listening.
Thank you. See you next time.